Hi everyone, I'm Jordan Roy-Byrne of the Daily Gold, and I'm here at the Metals Investor Forum in Vancouver, British Columbia. And with me right here is Gwen Preston, the Resource Maven. Gwen, let's start off talking about gold. What are your views on gold going forward, both short-term and long-term after this year?
Yeah, I love gold. Gold's a really interesting, one of the reasons I love it is because it's such an interesting space. Right now, I think we've finished, I look at gold seasonality a lot, and gold definitely has two sort of stronger runs in the spring of the year. Then there's the summer doldrums, which are a very reliable part of the pattern. Then you usually have a good fall move. The fall is the best time. Then the winter eases off, and then you start the pattern over again. In that context, we had the spring runs. They totally happened, both of them. Now we're into that summer section, like sell in May and go away completely applies to gold. So I think we're looking at a few months here where gold is not going to be that exciting. There may be geopolitical events that cause something. There may be a rate hike that causes something. But bigger picture, I think we're looking at a few months where gold is not that exciting. It's probably going to slide through the summer. But I think that sets up for whether it's the fall or whether it's really in January. I think there we're looking at a strong seasons for gold. And that just stems from this fundamental real rate situation where inflation is doing what it's doing. But the fact is that interest rates, nominal rates, are low and aren't really going anywhere. They're still negative in lots of parts of the world. In America, they're positive. And whether we get economic growth and rate hikes, that will mean inflation, or we don't get economic growth and we don't get rate hikes, in either scenario, you get real interest rates that are pretty close to zero going forward. So fundamentally, that supports gold, and that makes sense. And what I think is really cool in talking to you is that my outlook for gold, sort of off in the next little while, stronger after that, coincides pretty well, I think, with your outlook for gold, even though you look at it from a totally different perspective.
Right.
Yeah. So what do you look, when you look at the technicals for gold, what are you seeing going forward?
I see lower prices coming in the months ahead. And as far as when the next low could be, it's really hard to say. I mean, we have support at 1150 on the monthly chart, which is very important. If that breaks, then we have to start thinking about a retest of the lows. Now, switching gears to talk about the companies, what I talked about in my talk was just how 16 months ago, the industry bottomed a little bit before that. Actually, if you look at industry fundamentals and if you talk to companies, even if the gold price would slide a little bit more and come down below 1150, companies are in so much better shape now than they were during the bear market. So, I mean, to me, the bear market really ended January 2016, but perhaps we could say that the bull market's on hold or it hasn't really begun yet. I think it's going to take some time. But what I'd like to ask you, I mean, given your view on seasonality, do you think there's going to be some good buying opportunities in some juniors coming up in the summer? I mean, what are you looking for around that?
I definitely do. I think 2016 was a pretty dynamic year. There was a lot of share price moves that were dramatic. A lot of those prices have come off, and if they haven't, I think they will come off some in the next little while. Some companies are churning out news and they're going to be exempted from this slide. But I think there are going to be some good positioning opportunities as the next few months unfold. And I think those will be rewarded going into the fall or potentially into January of next year when I expect things to perform quite well. So yeah, I mean, it's a pretty exciting sector right now, I think. I think there's, like you say, companies are so much healthier now than they were 18 months ago. And the market is so much more engaged. I think we're seeing drill holes come out, discoveries come out, and share prices move dramatically on discovery holes. 18 months ago, those same holes would have elicited no response at all, right? So the market is alive, engaged. Majors are putting all kinds of money into companies. Everybody's a lot healthier. So despite this period where I think gold is going to be a bit middling and boring for a while, the sector has what it needs to not just survive, but set up for real success through that period.
Yeah, that's an excellent point. And if we're right and gold is soft or comes down in the months ahead, I mean, we can, number one, you can look at companies that you missed that have gone up too much. Maybe those will come back and correct. And also you can look at other companies. Maybe they add good value to their projects. Maybe the market doesn't quite recognize it at that point. So for me, those are things that I'm focused on. If our view is correct that we're going to see lower metals prices. Gwen, anything else to add before we close?
No, it's been a great weekend. There's been some interesting companies here that I didn't know about, so I've learned stuff. Hopefully you have too. It's been a great event.
All right, well, thanks so much for being here.
Thanks very much.